Welcome to the Swing Trading with Cycles channel. This is our update on natural gas today. It's February 6th, 2023. And oh boy, looks like we may have a green day, at least a green day for oil. If you're new to the channel, welcome. Definitely take a look at the pinned comment for past videos, also an overview of price action, some key price action concepts, I should say. This channel is all about trend analysis because prices trend. That's what they do. They either trend or they consolidate. And if you can figure out what direction the trend is moving and you understand the mechanics of how to, risk adjusted entries, etc., you can do really well. You can mitigate a lot of risk. And adding cycles to that approach really is the sort of cherry on top. So ton of info in that pinned comment. Take a look. So Friday was day 40 of this daily cycle. And so we talk, again, ton of content in there, but to help you understand cycles. But in the nutshell, it's really just looking at how long, like looking at a series of rallies and declines. So for instance, this is a cycle that we're in right now where the high has been on day 5. So you're essentially going from swing low to swing high. So this swing low to this swing high, a 5-day rally. And since that 5-day rally, we have declined for 35 days, right? Because this whole thing is 40, and we rallied for 5 days, so that's easy math. So, and of course, cycles are on all time frames, and that's the other piece of alpha is looking at multiple time frames to understand how they impact each other. Okay, so again, we're looking at the daily chart, and what we're waiting for is a swing low. That is how an uptrend begins, right? Like this is a swing low, that's a swing low, that's a swing low. And again, there's an entire video that talks through that. And what do we have today? Well, it's not a swing low. So we're not quite there yet, right? Because the levels are really clear, and that's why price action is helpful. It allows you to take the subjectivity out of it. So it is a green day. That's helpful. It was red at one point. We know that because of this lower wick. So it is a green day that's somewhat hammer-like. I think we have a little bit more to trade. And so we'll see if we can get that swing low. We really do need to close above this candle here, which is the Friday candle. And the reason is very simple, because this candle is a low point, right? For this, look, we just kind of declined all the way down to this low point. That's the lowest price here, right? And if we can cross above the high of that day, of that price range, because that's what candles are. Candles are just visual representations of a price range. I'll just say that again. Candlesticks are visual representations of a price range. Same with a bar chart, obviously. And that's important information to know. What was the range of prices at which the thing traded for a particular period of time? And so we need to cross above this high. And once we do that, and it looks like that's not going to happen today, if it's going to happen at all, but let's say it happens tomorrow, and Boyle has done this, by the way, and the market is closed. So, right, let's say we get our Tuesday candles, this is Monday, does something like that. That makes this day 40 a swing low and our potential daily cycle low. All that to say, this might be day 1 of a new daily cycle. But don't get too excited, because just because it's a new daily cycle doesn't mean it's going to run for a long time. Like look at this rally that only lasted 5 days. Or this one that coincidentally only lasted 5 days as well. But you could get something like this that was 11 days, this was 15. So you're going to have to watch the price action in real time as it develops, obviously. And again, we need to get that swing low first. But what we're really going to be looking for a long-term bottom is a weekly swing low. So it's the same pattern. It just happens on the weekly chart. So this week is the one that's marking the low. It's the same week where we had the low on the daily chart, right? That's the multiple time frame analysis. So the weekly swing low level is 2.780. So that is actually probably, I think that's like 10% up from here. So we need to cross above that again in the same fashion that we talked about on the daily. So that's about 10% from here. And so we have a lot of week to trade. This is only Monday. And we could be in a situation where this is also a low. It becomes a swing low. Again, we have to cross all the way above here for that to happen, right? We need this candle to do something like this, right? It's got to cross above that, and it's got to hold there. It's got to close above that. And then the idea, obviously, is that it would need to see follow through, right? Like that's the point. Now, again, just because we get a swing low doesn't mean it's going to go on and rally forever back to the all-time highs. We could get a short cycle, so something like that, right? We could get a short rally, just like we got a little 5-day rally on the daily chart, and then we move on to new lows. That's not a prediction. That's just a scenario to be aware of. And so if we think about the monthly chart, right, like you can see how this all coalesces, we would then need a swing low on the monthly chart eventually. But before we can get a swing low on the monthly chart, you want to kind of think about what would it take to turn the monthly candle green. Always important to know that, right? So what is the opening price for the monthly candle? And it is 2.730. And notice the weekly high, like to make a weekly swing low, was 2.780. So if we make that weekly swing low at 2.780, by definition, we would be going above the opening price of the monthly candle. And so what does that do? It turns the monthly candle green. Super important. That's one of the first things you look at. What color are the candles? Because that tells you if the candle is red, the price is literally going down in real time, right? Like that means the price is right now lower than it was when it opened. And so that's an important level to kind of keep in mind. That starts to give you a sense of where there may be resistance, potential target zone if we do get a little bit of a rally. So that's and eventually, you want to see something like that, right? Like to make a new high, start making new highs on the monthly chart. Like that's just how it works, right? And ultimately, you can't make new highs on the monthly chart without making the new highs on the weekly, and you can't do that without the new highs on the daily. So it's all a process, and so we're gonna have to see if we're getting that daily cycle low. If Friday really was the daily cycle low. Let's just not forget the shape of the yearly candle, right? The candle that is, each candle is an entire year of price action here. Let's get rid of the drawings. I mean, look at that. Look at this big red, and obviously it's only relatively early February, so it's very early. There's a lot of trading to happen for this candle, but I mean, wow, this is not an auspicious start. We're way below the low of last year. That's another level to be really aware of. That low is at 3.638. So what is that in terms of percentages? Wow. So we'd have to rally 43% just to get back to the low from last year. And to be clear, by being below the low of last year, that makes last year a swing high, right? Just like we have swing highs on the daily, the weekly, monthly, it all works on all the levels. So let's take a look at Boyle. Let's see. People like this is the one that actually it closed as a swing low. So notice natural gas itself did not close as a swing low, but Boyle did. It's important to understand those details, right? And we talked about this in the previous video, what the level would be, right? Because we said, okay, if Friday does turn out to be our low, what is the level we need to get above to make it a swing low, right? And we obviously got above that level and we closed above it. Now, again, the idea would be to see follow through, but notice it's not the first time we did that, right? Like we closed above the high of this candle, right? That was a swing low at once. That failed, right? That's another important concept. Once we go below the low, like this was a swing low in real time, and then this low broke that swing low, and then we got followed through to the downside. So obviously swing lows and swing highs can always fail. Also note, we haven't closed above the 10-day moving average since December 16th. One of the longest stretches, and that's the same thing for natural gas as well. You can see that's this blue line here, and where is that? That is right now at $7.42. I think that's like 10% up, and you'll notice that's about 16% up. And so at some point we're gonna, especially if this is a daily cycle low, what we would expect will close above the 10-day moving average. Although to be clear, it is moving lower, so that number is going to keep getting lower and lower. And of course, at some point, we will close above the 10-week moving average. That could take a while. And the weekly swing low level for Boyle is 787. So notice, those levels are very similar. 787 and getting to the 10-day moving average gets you actually pretty close, right? 742. So, and that's not a coincidence, right? Like, I would say the more important level to look at is something like the weekly swing low. So again, going above that would make this a potential bottom, and then you get some follow through potentially. But again, you can see this was a little rally that failed. This was a little rally that failed. So you'd want to be on guard for something like this. This was a slightly longer rally. I mean, in terms of percentages, this was probably pretty good. So that's 200%. So right now, this is just an inside candle. It hasn't made a lower low, right? Like you can see, we're not below last week's low, and we're not above the high. So we're just inside the range. Have to get above 7.87. So that is Boyle, and for Boyle, the monthly chart opened at 693. So that's not actually too far from here. So above 693, and the February candle goes green, and it becomes a nice little hammer. So that would be bullish, at least short term. And if we look at UNG for those similar levels, so UNG opened the month at 891. The 10-day moving average is somewhere around 917, and looks like we closed at 815. And you can see we also close as a swing low. Actually have this line drawn here. It's very clear, and we also close near the highs. So that's that's interesting. One could certainly set up their risk reward here. And the weekly swing low level for UNG, that high is 946. So you can see it all triangulates. And of course, the reverse of these is cold, as an example of the inverse. What we want to see from that is a swing high on the daily, and that's exactly what we saw, right? So the low of Friday was basically $65, and we closed here at 62.46. And so just as that becomes a swing low, or Friday potentially becomes a swing low, you'll want to see that Friday becomes a swing high for cold, right? That it's moving in the opposite direction. And so that's our update for natural gas. A possible bottom. It's the first green day in a really long time, at the very least. And so the levels are clear. No need to get overexcited or overeager. Thanks for watching.